Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. I'm coming to you today from our live options room. We started this back in January of 2025, and it's been growing great. We're at new all-time highs today. We're also at new all-time highs in the live trading room. We've got great communities of people in both rooms of all levels, and you're very welcome to join us even if you have never traded before. It's a great place to learn. It's also a good place if you have trading experience to share what you're seeing in the markets because it really is very helpful. And I do that throughout the day. I tell you what I'm buying, entry price, stop price, target price, reasons for my trade, adjustments along the way. And yeah, both rooms are just rip roaring. Okay. Don't want to spend too much time on that, but if you want to join us, go to drstoxx.com, drstoxx.com, click the subscribe button, scroll down to the live options room, and you can join both rooms at a 40% discount. All right, let's go to the charts. So I don't have much time today. I'm going to make this quick. I'm going to look at indexes real quick, some sectors, the mags, and then the trades that we actually have open in both the live trading room and the live options room, along with a handful of other stocks that I've been mentioning along the way. All right, this is the S&P 500. So we are in a trading range, folks. It is not the beginning of a bear market. It is not a downtrend. It is not even, frankly, I don't think it's the beginning here of a significant correction in the market. We've just gone flat. The market is having to spend some time assimilating this massive rally we had off the tariff lows, right? Way back in April, way down there. That was a beautiful time to be a buyer of stocks, as hard as it was down there. And now we've just gotten, the market's gotten a little bit ahead of itself. It is now trading, the S&P 500 is trading at trailing PE ratios that have not been seen since pretty major market tops, right? 2007, 2000, 2021, right? So the market does that. It gets ahead of itself, and it usually does one of two things when that happens. It either flattens out, as it's doing here, goes into a trading range, allows the economy itself to keep growing, those big companies to keep growing, and then the valuations start to come down, right? Only two ways of lowering your valuation. Either the stock price has to go way down, or your earnings have to go up relative to the stock price. So that as long as they kind of stay flat, earnings will grow, and then the valuations start to trail lower. But I think that's all we've got pretty much here. Here's my map, right? I'm just going to give you a brief map. I think we're going to get sometime between now and the end of this month, the end of 2025, which is about, I don't know, with the holidays and so on, how many trading days are there, but there aren't that many. There's, the few days before Christmas, and then a few days between Christmas and New Year's Eve, maybe 8 or 9 trading days left in the year. And I think we're going to get a little bit of a breakout into the end of the year. Probably most of that's going to happen this next week. I think we'll get the best move this next week. We kind of flatten out during the light volume trading week when most people are on holiday and they're not really trading anyway. Talking about the big desks, big traders. And then I'm afraid to say, that I think the next move after that for the market, we get up here around 7,000. I'm pretty sure we're going to tag 7,000 before the end of the year, or maybe a couple of days after, because the Santa rally does extend into the first 2 days of the new year. And I think that's probably about when we're going to get a pretty significant correction, maybe 5 to 7%, maybe more, but we actually need that. I'm actually looking forward to that, assuming it happens. It doesn't have to happen. Market doesn't listen to me. I don't tell the market what to do. But I think we still have a hawkish Fed until Jerome Powell leaves in May. That's 3 meetings, and I think we'll be lucky if we get one cut somewhere between now and May, and it's probably not going to come in January, and that's probably going to be the trigger. Right. So we kind of float around to January, and then boom, we go back down again. 5 to 7% haircut in the S&P, in the NASDAQ, maybe a little bit more. In the small cap index, maybe even more than that. 10 to 12% perhaps in the Russell 2000. And then we get out to, sorry, I'm making a mess here, but then we get out to February. Where is February? Right in here. Somewhere in the middle of February, I think we're going to have a very, very nice buying opportunity. All right, so here's my plan. I'm just taking this one day at a time. So, I was a little bearish coming into this week, and then with the data that came out yesterday, the CPI, tame CPI, and then the market reacting positively for the most part, it wasn't that great. Market reacting even more positively today. I'm now bullish this for the rest of this week, which is just a few more hours, and bullish into next week, and modestly bullish, or at least I don't think it's going to be bearish in the week between Christmas and New Year's. Okay. 7,000 probably going to get hit somewhere between now and January 3rd, 4th. Then we get a pretty nasty haircut. I'm actually looking forward to that for a couple of reasons. One, it's going to give us better entries and better upside potential with less risk when those valuations start coming down and the prices start coming down and we get down to levels of support. 50 period moving average, 200 period moving average, and different levels of support in between. Number two, what was number two? I had two reasons in my head. It's been a long week, I'm afraid. So the valuations are coming down, gives us better entries, and I think it takes some of the risk out of the market. It'll come to me. The second reason why I'm looking. Oh, I remember. The reason why I like pullbacks like this that we kind of expect to happen, and then when they actually happen, I like it. Why? Because we actually make more money on the downside than we do on the upside because markets fall faster than they rise. They usually, however, they kind of sneak at you. They come out of nowhere and you're not expecting it. And you're totally long because it's in breakout mode. And then, then you got to scramble. You've got to sell your longs and get some hedges on and short some stocks and get into the inverse funds. But since we kind of see this coming, and not saying that it will happen, and not saying it can't start soon, could start tomorrow for all I know, but we kind of have this prepared in my mind, at least. We can start to ease out of our longs in the week between Christmas and New Year's and start to put on some hedges with some wide stops so we give it some room, and then we'll be ready to go. And we can make some good money on the downside. That's usually how we approach these things when the markets get up near all-time highs and they're greatly historically overvalued. We just have to play cautious here. We're not being uber bearish. We're not being perma bears or anything like that. We are very much strongly bullish most of the time, but it's just one of those things, and we'll see where that comes. But always one day at a time. So NASDAQ is pretty much the same story. The difference here is that because the NASDAQ is just tech, and because the mags have such a big part of the NASDAQ 100, we're seeing a much stronger move from yesterday's open to today where it is now. These two big green sticks on very good volume. Today's volume is a little bit light, but it looks like it's probably going to come in line with average. Yesterday's volume was above average, and it was the largest volume in about 4 days. That's a bullish marker. People are getting into the market again, having gotten out of the market in those previous 4 days where it was smashing lower quite sharply, right? So it sucked in a whole bunch of new bears. They had to cover. They scrambled. Short covering happened yesterday. Today is not short covering. Today is new buying, and I like that. I think this is going to sustain. Is it going to just go skyrocketing? No. Are the little growth stocks that have been beaten down like crazy, are they going to outperform? Yeah, for a few days they will, because they'll bounce back and the shorts cover and all of that. But I still don't think that's a good place to go. With a few exceptions, it's not a good place to go right now because just too much uncertainty, and the AI narrative still isn't very strong, right? In fact, there's a lot of doubt about that right now. And there are hints, there are pockets of good things. Like you've got some good stuff going on in some of the energy plays that support data centers, some of the software infrastructure that support data centers. You've got some good stuff going on underneath the surface, but the plays that we normally like, the NBIS and the IREN and CoreWeave and Circle and what are some of the other ones? VRT, VST, CEG. Those guys are still not. I mean, a couple of them are okay, but still not really worth going after just yet, unless you just do little nibbles and looking for a 2-day pop. Okay, so NASDAQ stronger. I don't know where this is going to top out. I really don't. The 7,000 for the S&P is a good round number, and it's up at all-time highs. And I kind of don't think the NASDAQ is going to get that high. So here's the end of the year. Maybe we get up here right around 26,000. I don't know what that would be for QQQ. Let me take a quick look because that's a better marker. Yeah, there we go. Ouch. So this was my original map for the QQ. Stop it. This is my original map for the QQQ. That squiggly blue line right there, and it's, it hasn't been perfect, but we did get the pullback. It went further than I thought it would. We're starting now to get the bounce. It's probably going to last longer than I thought it would. And then I thought we were going to get another leg lower, but now my map is something more like this. Out to the end of the year, maybe a little bit into January, and then we start to get some more significant legs lower, and then we probably should get another leg down here. 580 by the time it's all said and done is pretty doable for mid-February. Yeah, it's going to be a bit painful, but hey, we'll just take it one day at a time. We're going to ride this wave up. When we get out to January, as long as we're still thinking bullish, we'll hold on to longs. But if we start to see some, some distribution, some weakness in the key stocks, we start to see some intraday breaks of support, then yeah, we're going to get out of our longs and we'll start to put on some hedges. Okay. The small cap index, I don't really have a good map for this one. It's actually been a lot stronger than I thought it was going to be. We hit, I don't know if that's all-time highs, but it's certainly multi-year highs just a few days ago when the S&P and the NASDAQ were not looking very good. They were printing lower highs, small caps printing higher highs. But I'm still not a buyer yet of the NASDAQ. I mean, the Russell 2000. I have a feeling that if the other two indexes come down, this one is really going to come down and come down hard and fast. So TZA is a good way of playing this. Not there yet. We're not saying buy it yet. I would wait a week or two, but that is a good way of playing that. All right. I would stay out of bonds. We like gold. Gold is just a nice steady rise higher, and all the macro tailwinds for it are still converging. It's a perfect storm for gold, for silver, for platinum, for palladium. These metals are in huge demand. Supply chains are restricted, and gold and silver are acting as assets, right? In the absence of Bitcoin and crypto, gold and silver are acting as assets. And you've got government central banks buying up gold like crazy. So new all-time highs today. Is it quite? No, not quite. That was the all-time high back there, but we are very close to an all-time high. Actually, I think it is an all-time high in the futures contract, just not in the GLD fund. Nice looking bull flag. This is bullish. I know we have a little bit of bearish divergence working in here, but you can see when it works in a very strong uptrend, you tend to get more of a sideways move than a pullback. And sometimes they don't have any effect on the market whatsoever, right? You get a 6 indicator showing bearish divergence and it just keeps going higher. So probably 3 times out of 4, you get either a pullback or a sideways consolidation. And I think right now we're just getting some sideways consolidation. Call it a bull flag if you want. I would call it a bull flag or a pennant or an ascending triangle, but we've got 5 bars in there. You only need 5. And so the breakout could come at any time, but I think gold is a good place to be. We're long gold in the options room, pretty sure. And we're long miners in both rooms. We've got GDX calls, we've got nugget shares in the live trading room, and it's even better than gold. So you've got this, I'm going to revise my chart here. This is a cup and handle. Here's your neckline. I thought the neckline was down here. That is a support and resistance flip, but it's not the neckline. Here's your cup, and it's really a deep one. The deeper the cup, the bigger the breakout. And there we go. And here's your little cup, just a little one, and that's exactly what you want to see. You want to see a cup that's like 1/4 or less depth of the. So you want to see a handle. This is the handles. It's Friday, guys. Your handle, you want it to be like 1/3, 1/4 the depth of the cup, and the shallower it is, the stronger the chart is. And we had the breakout, we had the retest, held like a champ, and right back up again. US GDX and the miners, and there are a bunch of good miners in there. Newmont, NEM, American something something, AEM. Hecla is a good one. HL, Bearings, B, and what's the other one I like? Goldfields, GFI. Those are all good. For silver, you want to get into PAAS, which is gold and silver. There's a bunch of them that are gold and silver, like FNV and others. Best way to play the silver miners, and that's also a good space, is SILJ. We've got the options in our room. Okay, let's take a quick look at Bitcoin and Ether. So here's what I think for Ether and Bitcoin. I think they're both about to get a pretty decent bounce. Ether especially, Bitcoin less so, but a bounce nonetheless. But it's going to suck in a whole bunch of longs, and I'm afraid, I'm really worried that those longs are going to get burned. So I think both of them have more legs lower, and if we see the market go down in January into February, yeah, these guys are going to get pulled down probably much harder and faster. So I've got a low bid of 75,000 for Bitcoin, and it's not that far away from 75 right now. But I also think that I don't have this resistance trend line at the right space, because the supporting trend line is not parallel to it. This could be a falling wedge, possible, or it could be that the resistance line is actually a little bit higher, and maybe it's something a little more like this. I don't know. I'm just playing around with this, not saying this is definitive. But if that's the case, if it's up here somewhere, which has several points of intersection, then a bounce up to that level, maybe getting up to about 89, 90,000, is tradable, right? It's a tradable bounce, right? From 87 to what did I say? 95. I had it too low. From 87 to 95. Okay, that's not a huge move, but I think that's doable over the next week or two. And then you probably want to flip to the short side. Ether is probably in a better shape to bounce, because it is kind of flirting with this resistance trend line. It's been on top of it, it's been underneath it, and I probably don't have this in the right space either. But anyway, I'm not going to worry about that now. So probably a run back up here to test the December highs around 3,400. That would be a nice run from where it is now. It's under 3,000, so that's a 12% move, and you can leverage that with ETHT. And then I would take my profits there, because I don't think it's going to go much higher than that, and I could be totally wrong. And when we get there and it keeps going higher, I'm very happy to say I was wrong on that. But I have been right all along. I have to say, both Bitcoin and Ether have been bearish for about 6-8 weeks now, and that has fully played out. Quick look at natural gas, because it has come down sharply, even though we're heading into winter, and it is forming today what we call a classic reversal bar. I believe it is. Is it? Boy, it looks like it just touched the low of the couple of days ago, Tuesday. The classic reversal bar is where you open up inside of the previous range, you flush down to take out all the stops and flush out all the weak hands and get those weak longs out of here, and you go down so far that it's at least a 20-day low. I'm not sure we got that. Let me just check. 384.2, and today was 3. Yeah, it is. It's at least a 20-day low. Looks like a 6-week low. And then you rise back up, right? Because you got rid of all those silly longs that just were, buying on impulse. It rises back up, not only gets back into the range of the previous day, but it closes above the high. Above the open. And that's exactly what we have today. Classic reversal bar. Those typically are worth looking at. I know candlesticks don't carry the same weight they used to because of all the algo trading. All right, I'm running out of time here, guys. So let me do a quick look at the mags. Okay, we will sort worst to best. So Apple, we have Apple shares in the live trading room, and Tesla, we have Tesla calls in the live options room, and those are the two worst today. Sorry about that. Apple is, let me show you Apple. It's actually quite a nice chart. So it did the big flush out. It's not quite a classic reversal bar because it didn't close above the open. That was maybe a little bit of a hint that things weren't all that rosy. And now it's doing an inside day bar, but it's above the 50. Everything is still rising. It's still in a nice uptrend. And it is Apple. I would assume that this is going to get back on track. Everybody and their mother yesterday seeing that hammer candle said, buy Apple, buy Apple, buy Apple. And so we did, but it hasn't gotten started for us yet. Tesla, I think Tesla's going to be okay. It's just doing a little bit of consolidation. You know, it had a big green up to all-time highs. Then it got slammed the next day on back and fill, and then it's printed an inside day bar yesterday, and now just doing some sideways churn. What is that called? It's called a bull flag. It's consolidating the previous move, which was a big move, right? Down here at around 380, all the way up to 500 almost, and it'll be at 500 by the time we get out to the end of the year. We're long, so I'm already making a bet that it will continue higher from here. We just got into some Microsoft in the other room, and it was in breakout mode yesterday. It has pulled back. It gapped above the nice looking trend line here and the 21 period moving average, but it's been kind of downhill today from the open, and the NASDAQ itself, which is, mostly the mags, is still floating higher up near the highs of the day. It's a little bit of a concern, but what I like about Microsoft, the reason why I think it may have bottomed out after a long pullback, are these big green bars here. This is accumulation, had a big one yesterday, and you can see there was a big stretch in here when the market was doing some sideways churning. We had a big downward gap that was bearish, but everything else looks fairly good or neutral or bullish. So we're going to wait on that one. We've got our stops in place, of course. Some of the other ones I like. We're long Google, and it's did an inside day bar in the pink zone of the uptrending LRC. It is confirming that a little bit has been pretty sluggish. Most of the action today is in the stocks that have been really beaten down, right? The high growth, only growth, meme, Reddit kind of stocks that have been totally out of favor with the market for several weeks now, even months, and now they're doing really well today. So I think it's what we would call the dead cat bounce. People are chasing after alpha. Toward the end of the year, they want to prop up their returns. So I think that's what's happening with most of those. I don't think it's going to last, but it is what it is. And, we've got a few of those on ourselves. So we'll see where they go. Qualcomm's also got a nice setup, and this is actually one of the nicest of the mags. Why? Because it's above the 21, 21's above the 50, 50's above the 200. They're all rising. The big cycle, the big black cycle, you always want to pay attention to that, is rising off the lows. That's good. And it's printing a nice looking little, I would call this a mini pullback, right down to the 21. Nice looking breakout. Didn't get up to all-time highs, but this was big move on news, so it's not going to get up there anytime real soon. But a nice soft pullback, 45-degree angle, held at the 21, and is sort of confirming that move today. Stay away from Netflix. Amazon looks pretty good. It's not great, but it's underneath a lot of resistance there, and all it needs to do to really get going is hold this breakout. We've got a higher low, right? We've got a higher low right here compared to this low. Higher low, higher low. All we need for major movement in Amazon is to get across the most recent pivot high. And we could even, this is less conservative, but that is also a little pivot high. And once you start getting above those, that's where a lot of stops are placed. Stops start triggering from the shorts. And then people who want to buy into that move put their buy stops there. So that's why you get squeeze moves when it gets above certain levels. And those are the two levels. My the pattern that you always want to look for in a long downtrending stock. You're always going to get higher lows. Lower lows and higher highs. Oops. Maybe I should. I'm wasting my time here. And then you get a higher low, and then you have to wait for a breakout of the most recent pivot high, and that's what we're waiting for right now. Okay. Avgo looks okay, but not really okay. I wouldn't go with Avgo. PLTR looks good. So we were trying to short it, right? It had a couple of rollover days and then a big slam, and we were in puts, and we rolled down our stops to not too far from where we entered, and then we got stopped out yesterday with a small loss. Wasn't that major, but I really did think that that rollover and a close below the major moving averages on high volume was lights out, sayonara for PLTR, but it wasn't. Now, this has to be looked at as a bullish move because this is a bull flag with a rejection of a breakout attempt to the downside. And now we're breaking out above the range to the upside. So it is a long, it's a hold, it's a buy calls, whatever. I'm going to skip NVDA for now, and because this is the one I really like. AMD, we are long. Are we long calls or are we long shares? I'm not sure which, but anyway, holding the power gap open, tested it here and flew higher. Tested it here, flew higher. Tested it a couple of days ago, and it sure looked like it was ready to go back, like PLTR, ready to go into that huge gap. And then it got rejected yesterday, and total confirmation today on a big green stick all the way up to the 21. So this looks very good. We got in right at the bell, and it's just been all up from there. Now, let me look at some of our open swings. I won't do all of these. We're in some of the leveraged funds. I don't have the leveraged funds here because you always want to do chart work on the non-leveraged versions, but we are long QQQ with TQQQ in the live trading room. We're long SOXL calls in the live options room, and we're long gold miners in both rooms, as I said, and that's a really good place to be. So is gold, so is silver. So we have this little silver miner in the live trading room, and we have calls on SILJ, the junior miners of silver in the live options room. Google looks great, as I mentioned, and we've got GGLL on. We just added some ions, which is a nice looking biotech. Look how the stochastics, smooth stochastics, are all the way down below the 30, no, below the 20 line. And you've got the major cycle down near the lows. Perfectly set up to do a nice breakout of this little wedge. And then where's it going to go? We don't really know, but it's probably going to get up here to the blue zone, which is in the upper 90s. What else haven't we looked at? We are along APPX in the live options, live trading room, and it's doing a nice big rounded cup and handle. This is a continuation cup and handle because it's up at the highs of a long uptrend. And this is a stock it's an advertising stock for apps, and that's been a little bit out of favor with the market, but this is best of breed. And there's been some really interesting shift of sentiment in this company with call flow coming in and good write-ups and price targets being raised and things like that. And here it is up almost at all-time highs, and the market is still well below those. Perfect setup. Couple of fun trades. So PL is a space play, and I knew that this was already on my list. I had shares yesterday, actually, in my own account when I mentioned it in the room for the first time because it had this really nice looking chart, and Trump was out talking about pumping money into the space program. So PL would be a recipient of that along with some others. It's off to the races today, and here it is, really, really high. This is a momentum play. You've got an unfilled power gap on earnings. That's always a good thing to see. If you've got an unfilled power gap and it comes on earnings to the upside and doesn't even come down to test it, you know you're in a strong chart that probably won't go much lower, and you can hang on to that guy for several weeks. And then we got into WULF, which is getting some data center play today, got a whole lot of interesting call flow, and we've got a little bit of time. We've got some in the money strikes on this one. We'll just see where that one goes. All right, guys, I'm going to let you go. God bless. I will produce this video, put a link in both rooms, and we'll get back to some trading. We've got probably an hour and 20 minutes left of the day. God bless. See you in a little bit. Bye for now.